Friends, please stop talking. Friends, please stop talking. In case of independent branches, the accounts are maintained by the branch itself. Head office will maintain accounts. Last half an hour, 30 minutes. Now, head office will maintain accounts relating to the transactions of head office. Branch will account their transactions. My dear friends, here listen. Head office will account their transaction and branch will account branch transactions. Understood? So thereby it is not that one enterprise or one unit division finding profit for another unit. It is not somebody accounting for another person. So it is our own business transaction, we only will account. Everybody? So in such cases, the profit or loss will be found out easily by preparing final accounts. There will be complete accounts maintained by branch for their transaction. So profit or loss will be found out only by one method called the trading, normal final accounts. So through this chapter what we are going to learn is only nothing but final accounts. Preparing, trading, P&L, balance sheet. Is that clear to you? Here there is no unique entries and all. Cash sales made by the branch. What entry? Cash to sales. Like any other normal business entity, branch will make normal accounting entries. Credit sales, debtors to sales. Like that, normal business accounting entries will be made by the branch. Branch will prepare journal, ledger, trial balance and final accounts. Head office will prepare their accounts, journal, ledger, trial balance, final accounts. So we are actually going to learn through this topic. Not any special accounting, just preparing final accounts. And in learning final accounts through this topic, because when head office maintain accounts of branch, automatically the branch accounts are incorporated to head office. Everybody. There is always the accounts of head office connected to branch because head office only making both the accounts. Now, branch at one place, at one state, they prepare their accounts. Head office preparing their accounts separately. Now, when you present the financial statement of the business as a whole, you can't present like this head office separate, branch separate, attach it and give it to them. It is not like that. The company's financial statements should have information on a consolidated basis, in which we never will convey that this is head office sales and this is branch sales. This is the sales of this company. Could you appreciate that? So we need to compile, consolidate the information for the business as a whole. So thereby we prepare final accounts of branch separately, final accounts of head office separately, as well as the consolidated financial statements. Understand? So we are going to have three final accounts. Final accounts of branch separately because they have separate accounts. Final accounts of head office separately and final accounts of business as a whole. Because we don't know the form of business, so I am not telling company. It could be proprietary business or partnership business or company. But it is final accounts of the business as a whole. Could you appreciate that? Please respond, friends. This is not something like data system, stock and data system, nothing but final account. It is actually to be considered as a separate chapter. Don't relate even the dependent branch even with the independent branch, because dependent branch accounts and independent branch accounts has completely disconnected. Understood? Their data system, stock and data system, because one person finding another person's profit, either with the information of all the transaction or with the information of only the transaction made by us directly, that's all. With the partial information also I find out profit, with complete information also I find out profit. Data system, stock and data system. Could you appreciate that? Like that area not there in. So let us have a pakka understanding what are we going to learn in independent branch. So when branch is going to make their accounts, we are not going to learn the journal, ledger, trial balance, because that is quite common what is made by any other business entity. We are going to make their final accounts, trading P&L and of branch, of head office and overall business. Shall we?
Yes, sir.
We also want to learn certain entries still that occurs between head office and branch. We would like to learn, because branch transaction with outsiders, no change. But there are some special transaction that takes place between head office and, so it can't be purely taken as a transaction with outsider. The branch cannot account as if it is a transaction with head office, also cannot account the transaction as if it is with outsider. Correct? It is a transaction within the organization but separately accounted. Correct? Respond. And that is accounted by different person. In dependent bank, it is the head office only make accounts for head office as well as writing in one book as well as in the other book also. Correct? But here head office will prepare head office account, branch will prepare. So we would like to know how to account for the transactions between head office and branch. Everybody. So we are going to learn two things only. One, entries for the transaction between, in whose books? Both head office books. Same transaction will be recorded by head office as well as by branch. Correct? Now in case of dependent branch cash sales, who is going to make accounts? Head office only maintain accounts, even for the branch transfer. Correct? Here we are going to learn accounts by head office as well as by the branch for the transaction made between head office and bank. So we are going to learn two parts: journal entries for these transactions and preparation of final accounts, and maybe some issues relating to final accounts. That's all. Clear? So learning objective is pakka, sir. You know what is independent branch? What is independent branch? The branch accounts are exclusively maintained by, that's all. So which will prepare independent accounts, like right from starting from journal to final accounts. In that we are not going to learn all the other parts, we are going to learn the final accounts part. Correct? Okay. Before I proceed to final accounts, before we go for, let us make the transaction between head office and branch. So we are going to learn journal entries. Everybody? Maybe. Anyway, if I ask you to read the entries in the material, you will say not understanding. So let us directly discuss. Let us list out and let us understand this. The transaction between the head office and the branch, we divide that into 5 parts. Right? In that first, basic day-to-day transaction that takes place between head office and branch. Understood? What and all basic transaction that takes place between head office and branch? We know. Goods sent to the branch. Head office sending goods to the branch. That is how we open a branch. Everybody. In that case, now head office is separate, branch is separate. So how head office will make entry? It can't debit branch stock account. Who are you to tell my branch stock account is increased? I only should tell. Correct, Abba? So you should make out a point. Whenever you are selling goods to one person, that party will be debited. Like that only it will be seen. You are a different person altogether. I am giving goods to you. Correct, Abba? So thereby it is branch account debit to purchases. Branch account debit to purchases. That should be my effect. Because actually it should be a reduction from purchases. But sometimes when the branch is independent, and for want of measuring the efficiency of both head office and branch separately, these goods are transferred at the selling price of head office. These goods are transferred at the selling price of, and thus you are booking this as a separate revenue. For head office it is a, but it is actually not a revenue for business as a whole. It is not a revenue for business as a whole, but it is a revenue for head office. So when you compile these revenue and all, you will eliminate. When you compile the information of the business as a whole, you will eliminate these revenue. All those things we will discuss later. Presently, this is an independent revenue activity for the head office, and the revenue is not sales. We call it as goods sent to the branch. Normally we should know that it is a reduction from purchase. Why, sir? Is it giving profit to the head office? Actually no, but notionally we book the profit because we want to measure the performance of head office and branch separately. Understood? So I have sent goods. Branch is not making sales now. That should not reflect my underperformance. Understood? So thereby it is branch account debit. Debit the party. Credit what? Goes out. Are you following? So it is branch account debit to goods sent to branch. No profit booking and all. Branch adjustment, that nonsense and all not there. So branch account debit to. So from the viewpoint of head office, debit the person, credit what? Goes out. Everybody, whenever a person is giving something, he is so particular to whom he is giving. Correct? So first priority is the person to whom we are giving. Next only what we are giving. What we will give differ from person to person. Correct? Okay, so thereby based on the person only we will decide what to be given. So first priority is for the person. Receiver, no. First he will receive, then only see who gave. Are you following? First priority for receiver is, evan kodtha enna? First what I got. Who gave? Are you following? In other words, debit goods. Respond pa. Credit head office. Sender. Debit the person. Credit what? Goes out. Are you following? Receiver of the goods. Goods, head office. Understood? So that way, goods to head office. What goods? Na? Goods received from head office to head office. Actually goods. But to mention that very clearly, which goods? Goods received from. After this oral test, friends, so please listen, put all your mind for this, like this entries and all, 6 marks. One entry, 1 mark. Takkly you get laddu. Now listen. Now goods sent to branch. Entry by in the books of head office. Branch account debit to goods sent to. So debit the person who receives it. Credit what goes out. Branch. So goods account debit to head office account. Correct? Now listen, friend. Goods returns, reverse the entry. Ulta. Goods sent to branch account. No profit removal, all that concept and all. Correct? Here, head office to goods received from head office only. Those goods received from head office, now we are sending it, returning it. Correct? So you should not use a new account there. Everybody? So goods sent over, goods returns over. Cash sent. Simple entry pa. It is. Branch to cash. No branch cash, head office cash and all. Because in my books there is only one cash, no two cash. Head office books there is only head office cash. So I won't use the word head office. Correct? So branch. Again debit the person. Credit what goes out. What comes in? First cash. Head office. So cash to head office. Cash remittance. Cash to branch. Head office to cash. Everybody, you have learned 4 transactions, 8 entries. So takkunu completed. 4 transactions and 8 entries over. Clear? Instead of seeing simply Parag, you could also written. Anyway, now we are turning this page. Because even though it is there in the material, when you write once, it gets easily registered. Listening, writing, spelling out 2-3 times. In the class only preparation over. Now listen friends. Next step. One unique transaction. Branch customers returning goods to head office in Chennai, head office, Delhi branch made sales to Delhi customers. Now such customers returning the goods to Chennai. Understood? Either it could be incidentally happening, or it could be the policy such that any returns can be made only to head office. Sometimes what happens when we open different branch, for each branch manager we will give targets. What do we do? Targets. So what this branch manager sometimes they will do is that sometimes they are short of target, they will book some notional sales. They will book? So target achieved? Target achieved. Money not received, credit sales only. Next year beginning, they will reverse entry. They will book it as sales returns. Sales returns. So can I ask money to them? Sales returns, na? Or else following this. So these things will happen. To avoid all these things, what I will do is that, is it genuine or not? We would have told, the head office would have made the policy very clear. Any sales return can happen only directly to head office. Could you appreciate that? Either it could be incidentally happening or it is intentionally happening. Whatever be the way, what is the accounting entry, sir? Head office books. To branch, Who returned? Branch customers returned the goods. Correct? So thereby entry is goods sent to branch to customers we can't make. Because we do not maintain their account. For us, it will be accounted as if branch is returning the goods. Understood? So entry will be goods sent to the branch to branch account. Who returned? As if branch is returned. We make accounts like that. Even though who returned? Customers returned. Are you following this? Now what is the entry in the books of branch? Sir, entry will be 2 entries, friends. Branch will account as if the goods are returned by customers to the branch and such goods are returned by branch to the head office. 2 entries will be made. Why do you make 2 entries, sir? Because I have debited debtors. When they have returned the goods, I have to credit them. And I should book it as sales return because I already recorded as sales. Branch have recorded as sales. So I have to reverse the sales as well as reduce debtors. One event. But that goods there not with me. It is there with. So as if it is returned. So 2 entries will be made by whom? Branch. In relation to this transaction, 2 entries will be made by branch. What and all means? Sales returns to debtors. Then head office to goods received from head office. Like that 2 entries will be made for the single transaction. For head office, as if the goods are returned by branch. They don't see the customers at all. Understood? But for branch, they make a sales returns entry and goods return to head office. Is that clear to you, friends? Yes, sir. Okay. Similarly, cash remittance by branch customers directly to head office. Cash remittance by branch customers directly to head office. In that case, what entry? For head office, as if money is received from branch. So cash to branch. For them, two entry. What and all? Cash to debtors. They are receiving money from debtors. Head office to cash. Cash cancelled. Yes. Cash to debtors. Head office to cash. Cash cancelled, sir. So let us not make two entries here. What is the entry? Head office to debtors. So in that case, for goods also you make one entry, sir. Nothing is cancelable. All are different heads. Are you following? But here, actually two transactions only, no doubt in that. Cash to debtors, head office to cash. Understood? So naturally cash is not involved. I am not receiving cash and all. So we are making the direct entry. So as if money is received by whom? Head office. Debit head office. Credit is given to debtors. Could you appreciate that? So this entry is head office to debtors. Understood? Everybody? Yes, sir. So goods sent by head office to branch. Branch to goods. Branch to goods. But what goods? Sent to the branch. Branch books. Goods received from head office to whoever not telling, directly mic will be given, sir. Next, goods returned in the books of branch. In the books of branch. Head office to goods received from head office. Head office. Goods sent to branch. Everybody. Cash sent by head office to branch. Branch books. Cash to head office. Head office books. Branch to cash. Cash remittance by branch to head office in the books of head office. Cash to branch. Head office to branch customers directly returning the goods directly to head office in the books of branch. Sales returns to debtors. Head office to goods received from cash remitted by branch customers directly to cash to debtors. Head office to cash. Head office to debtors. Direct entry. Understood? In both these cases, head office will account as if it is received from goods or cash. Both are received from. That's all. Is that clear? Pakka? That analysis is must, sir. Simply don't dabba the entry. Understood? In the books of the branch, cash letters, like that, don't make the entry. Understood? So please analyze, apply, and then convey the entry. Everybody? Yes, sir. Okay. Now, friends, the next entry is a very unique entry. Even though the branches are dash independent feature is what? Accounting records will be maintained at branch. But the fixed asset account of the branch, capex expenditure, capital expenditure, that part alone will be accounted by head office. That part will be accounted by a major heavy capital expenditure. We don't want the branch, we want to give them operational independence, but not full autonomous. We want to give operational independence. Buying, selling, you do. But the capital expenditure only with the control of head office. You tell us, we will incur the expenditure. And we record, we maintain the accounts. So physically existing there, accounts here. You will not be given an opportunity of accounting so that you can manipulate. Not possible. Are you following? Please respond. Somehow operation independence required we are giving, but the capital expenditure we don't give. Most of the banks, sir, bank has got the operation independence. Bank branches only maintain their own books, sir. The capital expenditure will be maintained only at head office. Because they are also having accounts. I have the accounts. I only make the transaction. So paid 10, 12, paid 20, 30 rupees. Manipulate, respond. So I can do something there. Are you following this? Now this is not allowed. You pay, I will account, we will cross verify later on. Everybody. Now books will always should match with the physical existence. This is an internal control system, friends. Are you following? So thereby, sometimes even though the branch is dash, but the fixed asset accounts of the branch are maintained at head office. That's the point we would like to tell. Is that clear? Appo. Imagine if branch fixed asset account is maintained at what will be the entry in the books of head office and what will be the entry in the books of branch? Sir, if branch fixed assets are maintained at head office, then why do you have branch column, sir? You will know. Wait and see. Are you following? So we are going to see now, even though the branch is dash, even though for all accounts are maintained by branch itself, but this account alone, which account? Fixed asset account alone is maintained at head office. Is that clear? Okay. There are 4 things I would like to see. Fixed asset purchased by head office. Then existing fixed asset transfer. Not always when you open a branch, new assets are purchased. Some old asset will be there at the head office itself. We'll transfer that and we'll buy new one at head office. Are you following? That egos and all will be there. Understanding? So either we will buy new fixed asset for branch, or I won't say old, some unutilized fixed asset will be there at head office. Some additional assets will be transferred to branch. Why you buy new? Already there extra. Understood? Now, then we have fixed asset purchased by branch itself. Even the account is maintained at, but we are authorizing. You provide all the bills, now you are authorizing. Now you make the payment and buy. And they make the payment and they buy the asset. Who buy? Send us the invoice, we'll account. You don't have the authority to rectify the books. Correct, Appa? So, you don't given a scope for manipulation only. Is that clear, sir? Please respond. So, fixed asset purchased by depreciation. So, these are the 4 things that we would like to account now. Shall we? So, who is maintaining the fixed asset? Head office. Whose fixed asset account? Upper head branch fixed asset is maintained by head office. Head office fixed asset will be maintained by head office only. Are you following up? Okay. Now, a fixed asset is actually purchased by whom? In that case, entry is branch fixed asset, I should say, because when head office buy their own fixed asset, it is fixed asset debit. When they are buying branch fixed asset, I should tell it is branch fixed asset. In my books only both the fixed assets are there. Are you following? In our books only both the fixed assets are there. So thereby it is branch fixed asset to cash or creditors if it is credit purchase. Please respond. In the books of branch, no entry. We are not maintaining accounts and we are not party to the transaction also. They bought, they paid. His asset came here, we are using it, that's all. Are you following up? We don't have records, we don't know the price, we don't know anything, we are using it. We ordered for some asset came, that's all. Nothing more we know. From whom they purchase, how much, nothing. Understood? Okay, fine. Existing fixed asset transfer, which means existing fixed asset now originally purchased by At that time, head office would have made the entry fixed asset to cash. Now it is there in the books of head office as fixed asset. Now it is going to branch. Very good. Branch fixed asset to fixed asset. Understood? You are applying, sir, and getting the entries, not merely dabba in the entry. It is not memorizing. Correct? So it is our fixed asset which was there in our books as fixed asset getting transferred to branch. But I only should make the accounts. So now I will tell branch fixed asset increased and our fixed asset reduced. No entry here. Now we are giving the authorization, authority for the branch to buy their own fixed asset. Tell us the price, project, approved. Now you buy. So they are buying the fixed asset. Who is buying? And they are sending the invoice. Correct? Okay, but who is having the account? Head office is having the account. So we will maintain the accounts. Correct? Respond. What is the entry now? Branch fixed asset to branch. To branch. Branch fixed asset to branch. Because who paid the cash? Branch paid the cash. I can't credit branch cash here because in my books I have only branch account. So whenever they give cash to me, I credit them. Similar effect only will be provided. Their cash went out. So we offer credit to whom? Branch. Branch, any entry is required? Because their cash is going out. Even though fixed asset account is not there in my books, my cash is going out. As if I have given cash to head office. Head office to cash. Are you following? Cash is going out. Credit cash. But I can't debit fixed asset. Sir, is it not fixed asset? Yes, but I am not given the power to maintain fixed asset account. The fixed asset account is maintained at head office. Correct? So cash is going out on behalf of head office. So head office to cash. Are you following, friends? Depreciation entry is there. Fixed asset and all I can maintain. I don't have any issue. But if the fixed asset is used in a value will come down. If I make the entry depreciation to fixed asset, then that depreciation goes to my P&L. That is wrong. See, I have fixed asset, I am using it, that depreciation should go to my P&L. Fixed asset physically present at books alone, it is there in my books. I can't take the depreciation expense in my P&L. Whose P&L? I can't take in my P&L. In whose P&L? Head office P&L. It has to be there in what entry? Now, branch to branch fixed asset. I will charge branch. We will charge the branch. Aramiklama? Sir. So entry is branch account debit to. Here what entry, sir? Exactly. It is our expense, sir. Okay, debit depreciation. Credit fixed asset. Are you fixed asset? Illa, sir. Head office. Are you following this? So then entry will be in the books of head office entry, branch to branch fixed asset. In the books of branch, depreciation to head office. So why do we debit branch? I can't debit depreciation. It is not my charge. It is a charge for the branch, debit branch. But I have to reduce the fixed asset balance. So credit branch fixed asset. In the branch books, it is their expense. It is their depreciation to head office. Everybody respond. So we have learned already 6 transactions. At the time, how many entries? 6 transactions, 8 entries. 13 entries. For one transaction on 2 entries. So 6 transactions, 13 entries. Ipo 4 transactions, 8 entries. Because no entry is also entry. Please listen. Because sometimes they will test you like that. You should mention that no entry will be made in the books of branch. For that 1 mark. Understood? You should not simply keep quiet. What is entry? You should tell that there will not be any entry. Is that clear? There is no entry. Understood? Okay, so that way you have learned so many entries. Now oral test. Remaining entries we'll learn later. Now oral test. First prize. Ready? உங்களுக்கு கேட்கலாமா? Okay. Simple entry pa. From the first 6 transaction, debit the receiver, credit what goes out. Debit what comes in, credit that. Or just understand pa. Giver viewpoint, to whom he is giving is very important. Correct? So when I say goods sent by head office, head office giving so head office will see to whom they are giving, branch. Then what? Goods are cash cash na credit cash, goods na credit goods. That's all. When they are getting back, when I am a receiver, when I am taking the role of a receiver, I see what I get. Next who gave? Like that. Understood? If I get cash, debit cash. If I get debit goods, then credit the giver. Simple entries. Okay, friends. Everybody? Okay. Imagine, say I'm not making a specific test now, but you should have prepared for this entry test in the tomorrow sessions, because I don't know how well I can just put all the efforts after that tomorrow's morning tax session, and afternoon 2:15 we are having this journal entry class. Okay, so thereby please be revised. Now, no test, you understood these entries. If you really understood the entries, can we make very quickly entries the position if it is changed? What is that? Even though the branch is independent, branch only makes the fixed asset also. Complete independence. Are you following? It is not that independent this position should exist. Sometimes this position exists, or branch only will record their regular transaction as well as fixed asset account also. Correct? Now we would like to see very quickly, branch only maintain. Branch fixed asset is maintained by branch. If you really understood, very easily you can tell me the entry. The same 4 transaction, fixed asset, purchased by head office, existing fixed asset, transferred, fixed asset, purchased by branch, depreciation. Now listen, fixed asset purchased by head office. Correct? In the books of head office, you know what entry I will make? Exactly. Branch account debit to cash. Because from head office, cash is going up. They only paid for this asset. But we don't maintain their asset account and all. We charge them. It is money paid out for them only. So thereby debit branch, credit cash. Correct? Had the fixed asset was maintained by head office only, I would have used branch fixed asset to cash. Correct? If I was maintaining a fixed asset account, it would have been branch fixed asset to cash. I am not maintaining fixed asset, but I am buying fixed asset. I am paying cash. Entry is branch to cash. In the books of branch, they should record the fixed asset. No. So, branch fixed asset, fixed asset. Exactly. Because branch need not tell that this is branch fixed asset. Are you following? Head office should tell that it is branch fixed asset. Branch need not tell that it is branch fixed asset. Could you appreciate that? They will use the word fixed asset. But we didn't pay head office. We credit the head office because they have paid the money. Understood? This money is payable to them. Clear? Existing fixed asset transfer. Branch debit to fixed asset. Fixed asset debit to head office. We got fixed asset. Credit is offered to head office. Understood? புரிஞ்சுதுங்களா? Fixed asset purchased by branch. No entry. Why? Because I am not maintaining accounts. I am not purchasing. Understood? I didn't know anything. They have purchased their asset, they are accounting it. I am no way playing a role here. No entry. Now, fixed asset to cash or bank. We are buying fixed asset. Understood? Depreciation. Why fixed asset is not there in my books? Normal depreciation entry. Depreciation to fixed asset. Understood?